guys, what's up? In today's video, we are doing exercise of journal entries and ledger. This is just an exercise. We have done this topic in detail along with an example exercise in previous video. Do check it, it will be linked in the description box. As well as I think it's worth mentioning that there are notes of this topic available. They will be linked in the description box. Do check them. So in today's video, we are just going to do an exercise. Alright, so let's get started. Write up the accounts to record the following transactions. We have to make journal entries and ledger accounts with these transactions. 2017. Over here, I have made a mistake. You should write this 2017 with the heading of journal entries. I haven't written it. It's my mistake. Alright. Now let's start with the transaction number 1. March 1. Started business with 750 cash and 9,000 in the bank. We have started a business. An investment has been made into the business with 750 cash and 9,000 in the bank. These two accounts are our destination, which means they are debit. But the source of these two things is capital. As we studied in the previous videos, that the owner's share is called capital in accounting. So, capital is our credit, cash and bank is our debit. Now, there are two ways of writing this transaction. You can divide it like first write cash, 750 debit. Then write capital, credit 750. And then you can write another transaction with bank, 9,000 debit. Capital 9,000 credit, or you can just write them together. Over here I am writing it together, but it's totally up to you how you want to write it. You can write it separately, you can write it together as well. So date March 1, cash 750, bank 9,000. And then we will write capital and we will add both of these amounts. Both amounts are our investment. So we will write them together. Capital 9,750. Now we have to write the description of the account. So we can write invested in the business. Let's move on to next transaction. Over here, these are actually dates. We have written March only once, but these are dates. These are not serial numbers. March 2 received a loan of 2,000 from B. Blaine by check. We have received a loan of 2,000. Loan. That means we have to pay this back. So, B. Blaine payable and it is by check. So, it goes to the bank. The two accounts being affected by this transaction are bank, B. Blaine payable. We achieved something in the bank. So 2,000 in the bank. Bank is our debit. We achieved it through B. Blaine payable. So B. Blaine payable is our credit. March 2, bank 2,000, B. Blaine payable 2,000. Now we will write description of the transaction. Received loan from B. Blaine. That's our description. Description is totally up to you what you want to write. Now next transaction, March 3 bought a computer for cash 600. We have purchased a computer and we have given cash against it. How much? 600. The two accounts being affected over here are computer and cash. We achieved computer. Computer was our destination, so it's debit. And we gave up cash for it, so it's our credit. If you are confused about destination and source, check the previous video. We have talked about it a lot in that video, which is why I'm not talking about it over here. Easy transaction, March 3, computer 600, that's your debit, cash 600, credit. Now we will write description. Bought computer against cash. You can also write bought computer on cash. Purchased computer. All of these descriptions are alright because they are letting you know what exactly is happening over here. Next transaction, March 5 bought display equipment on credit from Clear Count Limited 420. We are purchasing display equipment over here but on credit, which means that we will pay this person later. So display equipment is our debit because it is our destination. Clear Count Limited is our source. So Clear Count Limited is credit. Alright, March 5 display equipment 420, Clear Count Limited payable 420. Now we are going to write the description. Bought display equipment on credit. Now next transaction is took 200 out of the bank and put it in the cash till. Alright, you have taken 200 from bank, you withdrew 200 from bank and you kept it in the cash. What's your destination? It's cash. Cash is our debit. And what's the source? Bank. So, March 8, cash 200 debit, bank credit 200. Now we will write description. Added 200 from bank to cash is your description. I really hope you guys are understanding it. If you are, make sure to give this video a thumbs up, and if there is any confusion, let me know in the comments below. Now we are doing next transaction, which is repaid part of Blaine's loan by check 500. We are repaying a part of Blaine's loan. The total loan was 2000, but we are only paying 500 right now. So part of Blaine's loan. Destination is B. Blaine payable and our source is check, bank. So the transaction is March 15, B. Blaine payable, debit 500, bank credit 500. Description is repaid part of Blaine's loan. Let's move on to the next transaction. March 17 paid amount owing to Clear Count Limited 420 by check. Alright, we have paid the whole amount that we owed Clear Count. We bought display equipment, remember, which was on credit. Now we are paying for that credit. So our destination is Clear Count Limited payable and our source is bank. We are paying it through check. So Clear Count Limited payable is our debit and bank is our credit. 420. Description is repaid credit for display equipment. Alright, now 2 transactions are remaining. Let's end this quickly. March 24 repaid part of Blaine's loan by cash 250. It's the same transaction that we had on March 15. The only difference is over there we were paying it through bank, but now we are paying it through cash. So March 24, B. Blaine's payable 250, debit and credit cash 250. And the description is repaid part of B. Blaine's loan. Now we are doing last transaction, March 31, bought a printer on credit from F. Jones for 200. This transaction is similar to the previous one that we did on March 5. We purchased display equipment over there. Over here we are purchasing printer on credit. So printer is our destination, debit. Printer 200. F. Jones payable is our credit, 200. Now we are going to write description, bought printer on credit. Now that's it for our journal entries. Alright, what are we going to do now? Ledger accounts. Ledger is all about posting the journal entries that we have just made. If you don't remember the format of it, do check previous video. It's like I'm telling it again and again, but it's important. So we are going to make one ledger account for each account. First we are going to make cash. Going in chronological order helps, as well as over here I will be highlighting the accounts that I have already mentioned in ledger account. However, if you are writing it on paper and pen, then you might have trouble in doing it. So what are you going to do? You are going to give a small tick to all the entries that you have recorded in your ledger through pencil. The reason you are doing it is so that you know what exactly you have already written. You won't be repeating these transactions, as well as it will make your work a lot easier. And once you are done, you can erase those marks that you have made with your pencil. So first one we are going to do is cash. It's very simple. Once you have made journal entries, everything is pretty much done. So first entry is cash. From where we got it? Date is March and we got it against capital. So March 1, capital, 750 debit, right? We are going to post it in our ledger account. Here we are done. Now we will see where else is cash mentioned. It's mentioned on March 3rd. We bought a computer for cash. So this is a credit transaction. March 3, computer 600. We are going to look for another entry. March 8, bank 200. We added 200 from bank to cash. This is debit. So March 8, bank 200. We have posted it. Now we are going for the other entry. March 24, B Blaine payable. We have paid B Blaine's loan, a part of loan, with cash 250. So this is our credit. We are going to post it on our ledger. March 24, B Blaine payable 250. Do we have any other transaction of cash? No. You should check this one, so just in case if you have missed any transaction, you should write it. Over here we know cash is done. We have posted all the entries of cash. Now you are going to add them. So total, debit side total is 950, credit side total is 850. Now you are going to subtract them and you are going to write balance, exactly how much is remaining. You will write your balance on the greater side. Is debit greater or is credit greater? Which side is greater? Debit, of course. It's 950. So we are going to write balance over here, like yes, there is something remaining on the debit side for cash. Understood? So 100 is remaining. Cash 100 is remaining on the debit side. Perfect. Now we are going for the next ledger account, which is bank. First one is March 1, capital 9,000. Easy peasy, we did this in the cash ledger account as well. Next is March 2, B Blaine payable 2,000. We received a loan, remember? So we are going to write that. Both of these are on debit side. Now next transaction is March 8. We took 200 from bank and we put it in cash. So March 8, cash 200. Next transaction is of March 15. We paid a part of B Blaine loan through bank. So March 15, B Blaine payable 500. This is also on credit side. So we will write it on credit side. Next is clear count payable. We paid 420 through bank for clear count payable. March 17, clear count. I forgot to write limited over here. But yeah, March 17, clear count payable 420. Now we will go through the journal entries and see if there is any entry remaining of bank. If there is, we will write it. If there isn't, then we will just add both the sides separately together and then we are going to get the balance. Over here it's 11,000 minus 1120. 11,000 is bigger side, so we will write our balance over there. Bank debit 9,880. That's our balance. Next is capital. Capital is easy peasy. We don't have to do a lot of things over here. Capital is a single entry, so we will just write March 1 bank 9,000, March 1 cash 750. Over here total and balance are same. It doesn't matter if we write total or balance. So we will directly opt for balance. We will write balance 9,750. Alright guys, so I think you must have understood the whole ledger. You can post other accounts through this easily. You must have understood the main concept over here. There could be some accounts where it will be 0. like both the accounts will be deducted, there will be no balance. And that's okay, that happens. Like, let's say if there is a payable account, you owed someone money, you paid that money, now there won't be any balance. So over there for balance you will write 0 or no balance, or you will just add a small cross over there. That's perfectly fine. Now you can take a screenshot of these journal entries and try making other ledger accounts by yourself. Alright guys, that's it for this video. I really hope you guys enjoyed it and understood it. Do get the notes, they are available in the description box. Do check the previous videos, they are extremely important and beneficial for you. Make sure to subscribe and share, and I will see you guys in my next video. Bye guys!